BCCL now, and it's time for a bumper debut. That's right, bumper debut of Bharat Coking Coal, and it lists at almost 96% premium. But then let's get on the management on board now, and let's assess BCCL's growth roadmap and also their budget expectation. And also we have our experts, and from them we'll also try to know the value unlocking for Coal India. Hi, welcome all of you. We are joined by Manoj Kumar Agrawal, CMD, Bharat Coking Coal, Mukesh Agrawal, Director Finance, Coal India, Sanjay Kumar Singh, Director Technical, Bharat Coking Coal. Welcome, good morning. Let me just come to you, Mr. Mukesh, first, because the IPO was entirely an OFS with proceeds going to the parent company. Given this, how will BCCL fund its ambitious growth and modernization plans?
Actually, as you said, that it was a OFS for 10% and the proceeds will go to the Coal India. But BCCL, if you see, the projected profit is more than 2,000 crore rupees every year from 2026-27. And in addition to this, there is a depreciation amount of around 400 to 500. So in nutshell, there will be around 2,500 crore rupees cash available to the BCCL. Whereas as per the projection, the capex requirement is only 1,000 crore rupees for the next 5 years. Every year 1,000 crore is required. So BCCL is able to do its growth program, so its earnings from the every year.
Right. Also talk to us about your budget wish list. We have the budget that's coming out on the 1st of February. What are you expecting to hear from the union budget in the next few days?
In the budget, we are expecting that already the long pending issue related to GST has already been addressed in the September 2025. So I think that the provision will continue and that will be helpful to the coal industry.
In addition to that, we wish to see in the budget there is some boost for steel sector, who all are our prime customer, and boost to steel sector will directly impact the coking coal sector and it will fuel the demand. So we are hopeful that the steel sector will get something good and in turn we will get something good.
Absolutely. But then, over 80% of revenue comes from top 10 customers. What steps are being taken to diversify the customer base?
You have to understand our BCCL company is a prime producer of coking coal. We produce around 58.5% of coking coal. And we are also diversifying our industry like CBM and in other ways. Our production presently is 40.5 million tonne. It will go up to the 56 million tonne in 29-30. And our strength is coking coal and washery. We are mainly attached vast coal, which is a prime requirement of the steel industry. We are producing coal, diversifying our business to solar plant also, and also in CBM, one Munidi plant of CBM, coal bed methane, is in very advanced stage and around after 1.5 years. Professionally, methane gas will be produced. So our top 10 customer and other customer will also come.
If you see right now, our customer base, the customer base is mainly PSU. For power sector as well as for steel sector, we are primarily servicing SAIL, Steel Authority of India Limited. If you see our projection for next 5 years, we are almost 5-fold to 6-fold increasing our coking coal production. This will lead to fulfill the complete appetite of Steel Authority, and then we will go to the open market to the private player of steel industry, and through auction route we will offer coal to them. And we believe with the boost in steel industry, our product will be sourced by the private players also, as we are very competitive, as well as the customer will save on logistics cost also.
Right. So the company also plans to increase its coal washing capacity. How much of a margin improvement do you anticipate from producing a higher grade washed coal, and what is the timeline for this?
So if you see the BCCL plan for next 5 years, we have a very ambitious plan towards washery. We are almost doubling our capacity from current level of 13 and 13.6 million ton capacity. So if you process 1 ton of coal to a washery and sell all its product like washed coal to steel sector, washed power coal to power sector, and the third product also to power sector, the combined revenue generated by these products will be and the net realization after selling of these products will be almost 3 times that we got by selling of raw coal. So for in next 5 years, the 16 million ton coal will go to washery for processing, and the net realization, we have a plan, and we believe that we will get about 3x realization, 3x net realization from these products in coming 5 years.
You can understand in the simple way, our profit will be around 1200 to 1500 per ton if we are washing every ton of coal.
All right, let's just also talk about the EBITDA. Now, in H1 FY26, there was significant decline in EBITDA year on year. Just to help us understand, how is the company addressing this, and what are the primary drivers behind this contraction?
So if you see, this is a very exceptional year where the region where we operate faced a very huge rainfall. So this year, the rainfall was highest in last 50 years to the tune of 2200 mm, whereas Dhanbad generally witnessed a rainfall of 1100 to 1200 mm. So this rainfall is badly impacted our open cast operations. At the same time, this year the season was such that the scorching heat was not there in the country. So the coal demand which we expect during the summer season, this time that was not picked. So these two are the primary reason for the low output and low offtake, and we believe that from next year such exception will not be there, and we will follow the general trend, as well as the boost in the steel sector will fuel up our output and offtake. So we are planning accordingly.
In addition to this, mining industry is the industry where fixed cost is 70% and around 30% is the variable cost.
Okay. So parent company Coal India is also planning IPOs for other large subsidiaries like MCL and SECL. How will the listing of these entities impact the resource allocation within Coal India Group, and how is that likely to pan out?
You had very rightly said that the Coal India has planned for listing of subsidiaries. In that first decision we had taken for the BCCL and the CMPDI. CMPDI is our consulting company. For that we had already filed the DHRP. The reason for filing these two DHRP was that these two companies are a separate nature, other 6 companies are a different. All those companies are the coking coal, non-coking coal, whereas this is the coking coal and the consulting. So their proper intrinsic value was not reflecting into the value of the Coal India share. Now with the listing of these two entities, their value will be properly underlined in the market, and the shareholder will get the benefit. Regarding the listing of the other subsidiaries, we had taken a decision because what happens in sometimes some companies perform exceptionally high and some companies could not perform. So because of the underperformance of one company, the performance of the other companies are subdued. To avoid that and to get a proper reflection of the results, it has been decided some portion of each company should be get listed so that the shareholder will get proper value of the companies.
Very well explained. Thank you so much, all three of you, for taking time out and speaking to ET Now today. Thank you so much. But then let's move on, and let's again